Today, we're going to crack the code on stock charts. It's a language that, believe it or not, speaks volumes all across the globe. And we're starting with a pretty interesting real-world puzzle that turns a local role into a global lesson. So just imagine this for a second. You're a market analyst, right? And all of a sudden, you're told you can't use the latest data from your own country's stock market. A huge part of your toolkit, poof, it's gone. What do? I mean, where do you even start looking for that next big market story? And this isn't just some hypothetical. For analysts in India, this is the new reality. The country's regulatory body, SEBI, advised against using recent domestic trading charts for online educational stuff. Now, this one rule sets off this fascinating chain reaction, basically forcing analysts to look outwards and really test their skills on a global stage. So, what does this regulation really mean? Well, it's not about stopping analysis altogether. It's more about setting some boundaries for educational content. And yeah, it's a hurdle for sure, but it's also a pretty amazing opportunity, a chance to prove that the core ideas of market analysis are truly universal. So what happens when your home turf is off limits for teaching? You pivot. You have to. This rule basically forces analysts to take their skills and apply them to a brand new playground, the global market. And it's the ultimate test, right? Are their methods actually universal, or did they just work back home? Okay, so with the Indian market off the table for this kind of analysis, we're shifting our focus east to the really dynamic markets of Japan and South Korea. Sure, the company names are different, the currencies have changed, but are the underlying patterns of human behavior, the buying and selling, are they the same? Well, let's find out. So here's the path that got us here. First, that SEBI advisory created a roadblock. In response, analysts pivot. They take their tools over to Japan and South Korea. And that brings us right to our case study for today, where we're going to dissect the trading action from December 19th, 2025, using this exact approach. So how do we actually read these charts, no matter where they're from? Well, I want you to think of our toolkit as a financial weather station. It's a set of indicators that help us read the current conditions and hopefully forecast the market's climate. First up in our station is the bias table. This is your at-a-glance weather report for the market. Is the feeling sunny and bullish? Is it kind of cloudy and neutral, or is a big bearish storm brewing on the horizon? This one little table gives you the prevailing mood instantly. And you can see it in action right here, up in the top left corner of the chart. For this particular stock, at this particular moment, the forecast is bullish. That's our very first clue about where the market's energy is headed. Next, we've got what are called pivot, support, and resistance levels. Now, if the bias table is the weather forecast, these are kind of like the key pressure systems. They map out the predicted trading range for the day, a ceiling or resistance that the price probably won't break through, and a floor or support it's unlikely to fall below. And that pivot point right in the middle, that's the axis everything is expected to revolve around. Take a look at this chart. You see those horizontal lines? Those are the pre-plotted support and resistance levels. They create a kind of channel, a predicted path for the price to travel within during the day. Think of them like the riverbanks for the flow of the price. And finally, let's zoom in on the little details. Retracement symbols. These are like the small gusts of wind on our weather map. These little arrows pop up on the chart to signal these tiny moment-to-moment shifts in momentum, a slight push-up or a small pullback. You can spot them right here on the chart, these tiny symbols with numbers next to them. They might seem small, but they are so crucial for telling the real-time story of that battle between buyers and sellers that's happening inside every single price candle. Okay, theory's one thing, but let's put our weather station to the test. We're going to look at two different stocks from that same day, one from Japan, one from South Korea, and see how these tools actually held up in real time. And just look at the contrast here. On the left, you've got this story of a powerful climb. On the right, a steep dive. Now, what's fascinating is that both stocks started their day with a gap up. They opened way higher than they closed the day before. But from that exact same starting point, their journeys couldn't have been more different. So how did our tools help us see these opposite fates coming? Let's break it down. The Japanese stock, it opened high and just kept on climbing, a classic bullish run. But the South Korean stock, it also opened high and then completely fell apart. So why the difference? This is where our tools are so critical. The indicators for the Japanese stock were strongly bullish, which supported that opening gap. But for the South Korean stock, the bias table was likely already bearish, warning that optimistic open was probably a trap.
So, focusing on the Japanese stock, you can see the price action totally respected the bullish indicators. It rode that momentum straight up, finishing the day strong. The forecast was for a clear, sunny day, and that's exactly what the market delivered.
Now let's look at the South Korean stock. The bias table and resistance levels were already pointing to a bearish, stormy outlook, despite that initial jump in price. And as the day went on, boy, did the market confirm that forecast. The price plummeted, turning all that morning optimism into a full-blown downturn by the closing bell. So what's the big picture here? We started with a local rule in one country and ended up forecasting trends pretty accurately in two others. And this brings us to the most powerful takeaway from all of this. Here's the most important insight. The language of technical analysis is universal. It really doesn't matter if you're looking at a stock in Mumbai, Tokyo, or Seoul. The principles of support, resistance, momentum, they're all telling the same fundamental human story, that timeless dance of fear and greed. So let's do a quick recap of what we've learned. We saw how a regulatory hurdle can actually open up new doors you didn't expect. We learned how to use a financial weather station with tools like bias tables to forecast where the market might go. We use these tools to understand both a huge climb and a really steep fall. And most importantly, we've seen that learning to read charts is an incredibly powerful, portable skill that works anywhere in the world. We've given you a peek inside the analyst's toolkit, and we've shown you how to read the market's weather, whether it's forecasting a storm or a beautiful sunny day. So the only question left is, the next time you look at a chart, what story will you be able to see?